Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome this week's Nadex Weekly Charts and Analysis. It is May 3rd, 2022. Um, Depending on where you are in the country, you're either in a monsoon, a hailstorm. Mother Nature is still trying to figure out what we're supposed to do here in spring. It's actually nice here, but where I am, but then we have rain in it a day or two, and then there's potentials for hailstorms. So everybody's in the same story. It's kind of funny. Spring is always so interesting in the U.S. And again, probably wherever else you guys are. So with that, let's go into things. I always have to laugh about that every time. For those of you that are new today, welcome. We always get some new people every week. I really appreciate you guys when you are logging in. And inevitably, I always get a couple questions from the new people. At the end, if you are brand new, I will give you guys my email address. You guys can email me directly if you want. Spring is always a little bit crazy with lacrosse and activities for the boys and the little ones. So sometimes it does take me a little bit longer to get back to you. But go ahead and shoot an email in if you have anything today that you ask a question about and I either don't get a chance to answer, or something that you wanted clarification on. Like we finished up and you're like, you know what? I don't fully understand what he just said. Totally fine to message me. Just so you guys know what my background is, I've been trading since about 1999. I'm going to throw myself in the Y2K class of traders. So I've seen a couple different, obviously some crashes, some rallies. I started with stocks and traditional options, so sometimes you'll hear me talk about just options in general. That's where that kind of comes from. Love options. Again, think it's an absolutely amazing asset class, whether it be traditionals or binaries. Did it for a number of years, ended up finding foreign currencies, opened up my eyes to kind of what the global economy actually looks like, what leverage markets look like, what 24-hour trading looks like, and really kind of the interconnected nature of everything. After that, learned to trade futures, worked for a company teaching people to trade. I did actually go inside of the industry, became a financial advisor working for one of the big three banks. I was never a floor trader, so I didn't actually ever work on the floor. But I did work in the financial district of New York. I worked for a firm up there teaching people how to trade. I actually worked on Wall Street. The bull was outside my window, and I can say that I used to walk past the New York Stock Exchange every single morning going to work. So very cool experience. They put the big tree up every year. The lights are there whenever there's an IPO. It's all fancy and everything. I used to go to happy hour with floor traders. I used to teach floor traders. So very, very fun times. Definitely, it's something I always think very fondly of up there. But being on the inside, I did learn a lot about bonds. It was something that a lot of people never get an education in. Even a lot of traders that I know, guys that are full-time traders. You ask them about bonds, they know absolutely zero about bonds. So although working for a big bank was not for me, it's definitely something that there are benefits to it. And like I said, I will always be happy for my experience with that because I learned something that I would have never learned. I was actually on a trading floor. I got to walk through the trading floor of that firm, and just when I was blown away by what I saw in there. Not so much. I mean, I could share with you guys. There was one corner, and that's where all the stock trades were executed. Then the whole rest of the floor was all bond traders. And I was like, wait a second, there's this many bonds, and it was unbelievable. So just really kind of put a different spin on things. So, but again, I work for, my company is called Keep Trading Simple. I'm actually not a Nadex employee. I've been working with them for a few years. I have a number of different strategies that I use to trade with Nadex. Love talking strategies, love picking strategies apart, love tweaking them, making them better. Love working with students. So again, don't hesitate to ask questions. I always like to say that, there are no stupid questions. It just means that you didn't understand the information the correct way the first time it was presented to you. So with that, let's dive right into things and let's just go in. Obviously, before we talk to a chart or talk a data chart, we do have to cover the Nadex risk disclaimer. All of you know, and again, this is just not particular Nadex, but it's really everything out there. But trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decision you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC. And for those of you that didn't know, Nadex is a registered trademark of crypto.com. Haven't heard any big news yet out of that, but again, the transaction is fully complete. They're rolling everything over. You guys know how when one company acquires another one, there's always a little bit of a lag time. I think there's some major things coming. I don't know any of them, but I really feel like there's some really, really major things coming for this. So again, if you are along for the ride, these are the best, type of scenarios. So like I said, I can't wait to, I can't wait to learn myself, but I can't wait to share it with you guys and see what really is going to come of all this. So our agenda for today is we're going to cover the upcoming news events. We had a very big news event just a little while ago at 10 o'clock. We had the JOLTS numbers. It blew it out of the water. For those of you that have followed the channel, it's a double-double, right? Meaning that we definitely had some crazy movement. Why? Again, pretty simple, right? It's a double-double where they adjusted the last one higher, and then this one was even higher than what the expectation was, even with the other one higher. So again, things rolling in the right direction. There was some, I don't want to say negative news, but there are certain people in the industry that I listen to. One of them is Paul Tudor Jones, a very smart individual. I'll show you what his comment is in a little bit. But when I saw it, I was like, yeah, I mean, he's not wrong. He's not wrong, but it's not really what you want to read. Yeah, we'll get to that in a few. Then what we'll do is we'll break down after we go through the upcoming news events for this week. It is a big week. The last couple have not been big. It is a big week. We have 3 interest rate rises this week with 3 different nations. One's already in. We have 2 more coming. We have non-farm data. We have ADP data. A lot going on. There was a leak in the Supreme Court. That's going to obviously throw some, political folks into a tizzy. Again, I don't know how there's a leak in the Supreme Court. It still boggles my mind to think about, the highest, the highest court in the United States, and there's a leak. It's like, oh, we were past all that, but I guess not. But then we'll break down indices, see where the trading opportunity is for the week. We'll see the currency market, as I said, 3 different nations rising their interest rate or their overnight or lending rates. That's a big deal. So there's obviously some currency movement out there and some currency opportunity. Last night was textbook, if you guys were able to grab it. Then we'll cover commodities. So commodities have been a hotbed for months. We're hearing these overnight rate increases basically because of commodities and the inflation associated with it. Every day there's a different news story. Cutting Russia off, not cutting Russia off, cutting Russia off, not cutting Russia off. There's an OPEC meeting this week. Natural gas is continuing to rise. We touched 8. Is 8 the peak? Could we get to 9? It's kind of like I don't want to say how do I say this? Like an auctioneer, right? Do I have 9? Do I have 9? We were complaining last year about 650, and now we're touching 8. So yeah, not the most fun times. And again, situation's only getting worse, and we go back to that politics aspect of it. We got elections this year, so yeah, not necessarily the scenario you want to be. 40-year high inflation, and yeah, all kinds of stuff going on. So much to talk about, right? So much to talk about. So let's go over and let's go right into kind of the news right now. All right. So I always like to click this just to get a little bit of a little fresh data, right? So right now, if you look at the last 24 hours, currencies look like they're rather flat, but it's actually a lot of retraces kind of up and down. It's misleading, okay? I get asked this question every so often, and I'll bring it up now. I haven't gotten asked it yet today. I'm sure I'll get it at some point. But there's different styles of trading, and everybody knows this, right? There's long-term investment trading, and again, that's what I did when I was a financial advisor, talking about wealth accounts and things like that. Really kind of long-term planning. There's the slower forms of trading like swing trading where your trades will last a week to a couple weeks and things like that. There's day trading, and like the pros are always tell you that day trading is so dangerous, a lot of challenges you can put back to this. And then there's like scalpers, people think like high frequency trading and people that are in and out of trades in minutes. You can do it with small accounts, you can do it with large accounts, different styles there, right? So right now it looks like there's not a lot of movement, and a swing trader is going to tell you, oh, it's boring. It's because they're holding their, if they've held this position for over a day, yeah, it's not doing a whole lot. But intraday, like the day trader, it's been going up, it's been going down. There's been a lot of movement back and forth again. So especially with what we have coming tomorrow, today should be a little bit slower, but tomorrow with the US raising interest rates, and then we have the UK raising interest rates again for like the 6th time. lot of movement out there, a lot of potential, right? As you can see, starting off, obviously the cash rate, they raised it more than the expectation. And this is kind of an interesting kind of thing to note as well. It was odd that they were only going to raise it 0.15 to go to 0.25. That, again, the human brain tends to work on quarters, halves, and wholes, right? It's the entire quarters theory of the market. So going to 0.25 makes sense. They were getting it back in there, but it's kind of a funky raise as far as raising it. 0.35% is not as bad, but they did a full quarter raise. They were at 0.1, now they're at 0.35. There was an explosion. You can see the Aussie dollar is only up 29. It's retracing back as it should, right? We rolled sessions, so again, there's profit taking coming in, but there could be more coming, right? Jolts blew it out of the water, hence why you're seeing also the dollar strength in there, because at this point, job openings are going even higher. They had to adjust it last time. It's even higher this time, even with the adjustment, right? There's no ifs, ands, or buts. There's nothing. I mean, every excuse that the Fed has given us, forever it was, oh, this is transitory inflation. Well, 2 years later, we're at 40-year highs. Okay, I knew that it was not going to be transitory. I'm not exactly sure how they thought it was going to be transitory, right? But I know the two things that matter most to me, like the two expensive I see the most, are what does it cost me to fill up my car, and what does it cost me to buy food? And they can say that, well, everything else is better. Yeah, but I have kids. I like to drive, right? And I know maybe if you're in like New York City and you don't drive, you don't care about gas prices. But the food costs and everything else you're paying, guess what? There's transportation costs that are now associated with that. So again, then after the transitory inflation thing, then it became, well, the labor market's bad, the labor market's rough, but yet job openings are just getting higher and higher and higher, right? I can tell you right now, one of my lacrosse parents, he owns a couple restaurants. I asked him, like, how's the labor situation working now? He's like, I'm still down 30 people, right? I think he owns 3 restaurants. He's down 30 people right now, right? And he's like, yeah, I'm working a ton. He's like, I'm working basically 3 shifts, at night, because it's what he has to do, right? He just doesn't have the bodies, but, again, people are leaving their homes, people are coming out again, but people are not going back to service sector jobs. And he has some cool, he has a gastropub. I mean, kind of cool scenarios, right? And he's a nice guy. He's like, yeah, people just are not interested in working like they used to, So, yeah, weird scenario, right? Well, later on today, we do have New Zealand. And again, we don't trade New Zealand on Nadex, but it does have a little bit of a proxy and carry over into the Aussie, which you can trade. Again, unemployment rate, look at this, 3.1%, right? I mean, pandemic is over, 3.1%. New Zealand was one of the first countries to start raising rates. New Zealand is basically the carry trade right now, but it's not one of the big nations, so it doesn't get not as much attention, for lack of a better word, right? But in reality, 3.1 is extremely low, looks good. Not that we can, for those of you that like lamb and stuff like that, New Zealand lamb, awesome stuff. It costs so much to ship it at this point. It's a shame because it's like, man, they were rocking and rolling, right? But again, raising interest rates. So tomorrow is the big day, right? First off, we start with non-farm employment change. Okay, it's expected to be less than last time, but last time it kind of hit it dead on. We'll see what it looks like, right? This is not the big non-farm payroll one. This is kind of like the kind of preface to it, the teasing factor to it. Kind of the first piece of it, right? ISM services PMI normally wouldn't be bad. Services where we're really kind of lagging. ISM manufacturing on Monday was a disappointment. So the question is, are we going to disappoint here too? But is it going to be enough to move the ADP non-farm payroll? It is at 8:15, so it kind of leads us. It's kind of pre-market, leads us into kind of what does it look like for the open. So could provide some interesting opportunity there early morning. But after that's all washed out, this is the big one. This is the biggie of the week, the FOMC Fed funds rate. Normally, right, if you just picked a random year, normally the biggest mover that exists is non-farm payroll. It's the first Friday of every single month, okay? Except when you have interest rate rises. Now, we've been basically at nothing forever because of the pandemic, right? Now, we're in the interest rate rising because inflation is absolutely out of control. 40-year highs, not what you want. Election year, people, again, vote with their wallets. They're talking about right now the forecast, it's going to be a 0.5 raise. Okay, this is our second raise. The first one did absolutely nothing. It was a 0.25, did nothing, didn't slow it down, nothing changed. Now they're supposed to be stepping it up. Okay. Now, if they come in with a 0.25 raise, the markets are going to go crazy. Okay. Do I think they'll do 0.25 this time? Not without riots. And I joke, it's no, there won't be riots because financial people don't riot. But if it's anything, I mean, even 0.5, in my opinion, is not enough. Okay. James Bullard says it needs to be 0.5. He was saying 0.5 the first time. He was the only member that voted for 0.5. But everyone else voted 0.25, and now magically they're doing 0.5. He's calling for a 0.75. Hal is saying we need to front load this. Again, front load means you do it first, not after a few. That's like middle loading, right? So I'm really, put it this way, if they do a 0.5, I have absolutely no idea what it is that they're eating, smoking, drinking, whatever it is. But I think we're getting the 0.5. The market's factored in. Now, there will still be some movement after the fact. In reality, though, if they do a 0.75 raise and this is a 1.25 instead of 1.00, I think that is what the right call is. But because the market right now and traders do not have a lot of faith in Powell, that would be a huge miss. Massive dollar strength, euro dollar down 200, 250 pips. It could be massive amounts of movement tomorrow. So it is an absolutely, I mean, really action-packed scenario. Okay. Now, how do we play that? Okay. Because you have to play it today. You can't get in tomorrow, right? Nadex does close down and reset their contracts. Everyone out there that has a live account better be looking at this like a hawk today, okay? There's going to be a very small window before the volatility stacks into this, okay? Tomorrow morning, if you are trying to trade this, the Fed funds rate, I'm expecting Nadex contract spreads are going to be huge, and the actual risk to reward opportunity is going to be small because there's so much volatility packed into this. But I think tonight there's a window for you to be able to find and get into those contracts, okay? Again, if you're kind of trying to avoid the spreads and the volatility in there, knockouts are better for that. So we may be able to, if you can't get into anything else tonight, we may have to jump over and look at knockouts right before, but there's probably going to be whipsaws back and forth. So we got to be very careful tomorrow as well. How do we trade this? Okay. This month, this is the biggest headline we need to watch out for is this Fed funds rate. And then afterwards, again, we'll see what the FOMC says. Are they going to be hawkish in their tones? Are they going to say, hey, this is the first of a whole lot of 0.5 raises? That's a lot of dollar strength. I mean, I don't think we can get the parity tomorrow, but I don't know if they lead with a 0.75 and then they say the next three are also going to be 0.5s because, we need to control inflation. Again, there are politics involved with this now as well. Could we see a 300 or 400 pip move tomorrow in something like the euro dollar? Maybe. So, there's a potential for a big bang tomorrow inside of the markets. And these are the days that you live for as a trader. Now, Thursday, we got it all over again, but now with the pound, with the UK. And again, you may or may not be a currencies trader, but pound dollar, again, we could have this could get absolutely just hammered, right? With the dollar strength coming in tomorrow. And then Thursday, they raise and we have a retracement again, maybe back to a 23.6, maybe back to a 50. There could be the potential for a full parabolic retracement move based off the dollar tomorrow. And again, this will be the third one. Aussie raised, dollar raised, UK raised. And this is UK's like 6th or 7th raise. It's supposed to be 0.25 again, and they're still seeing inflation, right? They're saying it's going to be 8-0 to 1 to continue to raise, right? It's a majority is already saying go, 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 go. And there's always that one person that, again, the outlier. And that outlier may not have voted no. That outlier, maybe the guy that's saying, or the girl that's saying, hey, it should be 0.5 because we're 6 in and it's still happening and it's only getting worse. Okay. Then we have unemployment claims. And again, historically low. 200 is about the average. 180 is nothing. Oh, and by the way, OPEC JMC meeting. And by the way, do you know who is part of the OPEC JMMC? Russia. Okay. Thus far, OPEC and OPEC Plus is what this is, has really not cared about the demand and the prices. With the prices up at 130 and then dropping all the way back down to 102, I highly doubt they're going to produce any more oil right now, especially because Russia's a voting member. It's like, oh, you're going to cut us off? Then we're going to keep prices high because I want to keep making this money. So I don't expect them to do us any favors unless there's going to be a major change suddenly where they're like, that's it, we're dumping Russia. We're going to take Russia out, which a lot of these countries I highly doubt are going to do that. But again, could be some major headlines for commodities as well on Thursday. Friday, non-farm payroll, right? Our unemployment rate's supposed to go down to 3.5. So it's a very interesting win. Administrations love to use data to claim that look how great of a job we're doing. The unemployment rate is not really a valid example of how great of a job you're doing. The number one concern right now for the public is not the unemployment rate. People are not concerned about losing jobs right now. People are concerned about going into a recession because of a rising interest rate environment. They're also concerned the fact that food prices in some things are double what they were last year. Gas prices, not double, but not far from it, right? Natural gas, 2.5 times, okay? So that is the number one concern right now. So unfortunately, the unemployment rate, it's great to pat ourselves on the back that it's 3.5. It's actually not an accurate reading. It's not a utilization rate. And again, they'll grab on anything they can to pat themselves, but that's not the number one concern right now. This is 3.5, creating jobs right now, getting the unemployment rate down as you're coming out of the pandemic, recovering, is not a great feat, okay? Because this is so low, that's why we're paying the price right now at the pump, at the gas station, at the, everywhere, right? So again, what they do, the average hourly earnings, again, we know that, how much people are making is great. We're making more money, we're spending more, but unfortunately, this is not keeping up with inflation, and that's where the problem is right now. The non-farm employment change too, I think it's an important number to look at. Again, having more people hired back to jobs is great. That's wonderful. Again, where we are in the economy, in the recovery, they should be, right? I mean, people are getting back out again. We know that online services have been taking a hit. Why? Because people are getting out and they're doing things, right? People need to go back out and start working. They need to, services. I mean, movie theaters opening back up again, amusement parks opening back up again. People are trying to get back out again, right? They're trying to spend the money. I mean, they're making 0.4, they're making 0.4% more an hour, month over month, right? They're spending it. That's what we're seeing, is they're spending it, okay? So again, very important number. I mean, if this comes in at like 500,000, holy crap. I mean, here's the thing. The Fed already knows what the number is. It's not like this is released. The Fed, before they're making they've already seen what this number is. That could also, again, if it's a big number tomorrow, I mean, if they do like a 0.25 or a 0.5 and this comes in double, say this comes at 500 or 600,000, you got to look at this and then look at the Fed and be like, so you guys knew that the expectation was 390, but 500,000 people now all of a sudden have jobs. Additional, over expected, and you only raised the 0.5. Why? Okay, it's a very difficult question to ask. All right, so, and then I can't wait for this one. This is what I'm looking for. Now, unfortunately, it's Friday. It's 7:15 at night. There's not going to be any trading activity. All markets are closed. He's participating in a panel discussion titled Toward a Monetary Policy Strategy. Okay. Remember, Bullard is the only one that said last time it needs to be 0.5, and everybody else voted 0.25. And guess what? The next meeting, everybody now is voting 0.25. He's been dead on every single time what needs to happen. He's called it a month, 2 months, 3 months early every single time. Could be important, could foreshadow what we're going to have next. And then also Waller is probably speaking. Yeah. Waller is also speaking. Waller makes some interesting comments. We'll see. We'll see what Waller says on the panel. But Bullard is the one we want to watch out for, telegraphing what's going to be next. Okay. And that's it really for the week. I don't think Saturday nothing, Sunday nothing, and then Monday not really any big deal either. And then Tuesday of next week we start getting into economic sentiment. And again, the previous economic sentiment in the EU, horrible. So we'll see what it looks like. Again, they were grossly negative last time. So we'll see where they go. As I said, before, Germany is in a very weird place right now. They want so much to cut Russian oil off, but if Russia cuts oil off, it puts them into like a 2 or 3% GDP reduction. Not great. They're like, no, but we have to do it. But at the same time, it's like that's quite a big economic hit, particularly for the euro. So we'll see what the sentiment looks like. Anyway, let's go across and let's look at the charts. All right, so the VIX. Okay. Yesterday morning, if you attended our YouTube session, we talked about how there wasn't really anything driving the VIX, no headlines, and it continued to go up, and then all of a sudden at like 2 o'clock yesterday afternoon, like, what are we doing? There's no problem right now. And price, the volatility crashed down, markets surged, they rallied. Again, we're lower. There's not really headlines right now. that are really kind of driving this. I mean, we look to see what the big factors are, right? I'll click it so it's fresh. There's not a lot up here. Job openings, we knew that already, right? Russia paid some, again, Russia still hasn't defaulted. They paid some people in U.S. funds. Again, they can't, they, weirdest scenario. It's like, hey, we owe money. Great. Well, you're not allowed to pay. Okay, we're going to default, but you're not allowed to pay. Well, we want to pay, but you're not allowed to pay. It's a weird scenario, though. Besides that, not much, right? News from last 11 hours ago, 9 hours ago. Here's the jolts 5 hours ago. There's just not a lot of headlines. So again, the VIX should be coming down, right? Now, it's down 4%. 4% is a decent move for the VIX, right? I guess it's down what, 1.45. I mean, you can see it's a decent mover, right? The indices are kind of up, kind of down, kind of confused, I would say, more than anything else. Here's the ES. So this morning, again, I was looking for an opening, again, trying to mess around with JOLTS data or whatever. And I kind of had this marked off. I was looking at a couple different strategies. You can see it literally chopped. It went all the way down about 2/3 of the way through, and that's right when news was starting to kick in. And then again, you're not going to trade this with something as big as JOLTS, right? But there was an opening print, a 2/3 of the way pushed down, didn't make it before JOLTS. So again, you had to get out. But now we're using that same level, right? It was a top, a top, a top. There's your 3 touches. It came through at base, and now it's kind of like, we pulled back to the 50, right? Pulled back to the 50. Didn't quite hit it. We kind of had an opening short trade, but then we had great data. We based, and now it's like, hey, wait a second. Is this the time for us to take off? We got some room to run. Can we get all the way up to the 61.8? I would say today, probably. I would say that this is probably my upper side target today of 42.10. The VIX is down 4%. What other news we got? We know the interest rates are going to rise. All the other data looks good. I mean, the JOLTS data was great. Question is, has the market really factored in tomorrow morning's data? Okay. I believe that the market has a majority of it factored in. There's obviously going to be retail traders that look at it tomorrow. And again, in reality, this should rise today in preparation for this tomorrow for this to be able to go short. There is some selling. And again, we got a little bit of a zone right up here, right? Sitting right above that area. Again, it's a pop, and then the next is up at the 78.6, and I'm not really concerned about that 78.6 level. But the reality is this turned, yeah, there's some sellers here, not tons. But I think 42.10 is really where we look for targets of the upside today. Again, it is the day before an interest rate rise. So again, people are preparing for that. There's no major headlines out there. I would say the biggest headline we saw yesterday, and again, I don't know exactly when it's happening. I should probably go back and read it. Putin has to do something for some cancer treatment. They're like, hey, listen, you got to go ahead and do this. I don't know what stage. I don't know any of those things. I have no idea. But they want him to do this surgery, so he's going to have to temporarily give power to his number 2, right? And then he'll get it back again once the surgery's over. But it's the same thing. Biden, months ago or whatever, had to go in for a procedure. I don't remember what it was. It was nothing life-threatening or whatever. But, Harris was, technically the president, or the temporary president. He gave power to her, so he had his procedure. And then when he came out, you're good. Okay, bam, you got it back again. It's the same thing. So, that was kind of the biggest kind of war-based news that we saw. I mean, I doubt the other guy gets power and then hits the red button, but you never know, right? But overall, this right now is going to tell us what's going to happen tomorrow, or kind of foreshadow, okay? Ideally, I mean, this is, again, it's gone through the 50. It ran into the sellers behind the 50s. This is an area we should see a pop. The volatility, the VIX is down 4.7%. It should find some type of a ground and bounce. We're at lunch right now. It's extremely low volume. It's not hard to move it around. The question is, as soon as those traders come back at 1 o'clock in 30 minutes, that's where we tend to see moves, right? So the big question is, do we hit 410 today? And I would say that, yeah, I would like it. I'd be good with that. I'm actually all on board the uptrend today, because I think tomorrow will be more of a down trade when they start talking about not only what the interest rate rise is, but what does it look like at the next few meetings. I think people are going to not necessarily be happy about that. And I think they're going to tell us, hey, we're going to raise for the next 3. The plan is to raise it 0.5, 0.5, 0.5. At the end of the year, we're going to be up at 2.25 or 2.5. I think a lot of people are going to be really not happy about that. I think tomorrow is kind of a selling day afterwards. But we got to see it go up. If the opposite happens, again, if we see price really start to come back down again, you got to look at the base, the bottom level right down here. This is a level also for tomorrow, right? If we're looking at this level down here at 40.68, that's a nice little place where we had a base and a strong pop-up, right? Right around that, 40, again, really anywhere between 40.70 and 40.54. And you may say, well, wait a second, why if price goes down from now, if it does tick through this level, goes down now, goes through the European session and goes down in preparation for tomorrow, why would it go up when they raise the interest rate? Well, if the market believes 0.75 is justified, 0.5 is technically a disappointment. If they pull a 0.25, again, I don't think they will, but I was surprised last time they didn't go to a 0.5 because I thought it was like 80% baked in. If they did a 0.5, the market's going to explode tomorrow. It will literally find something and go all the way back up again. It'll be like, yep, another month of free money, right? So right now the sentiment is negative. We got to see where we're going to roll with it. I think ES tomorrow, and really what happens in the next 24 hours from now till this time tomorrow is really going to foreshadow where the big money is moving. Okay, so you got to watch this like a hawk. But I do think 42.10 today is in the cards. Again, lunchtime right now, all it's doing is kind of pulling back and retracing the parabolic move as it should. But I think today we had the ability to go higher, especially with that VIX holding low. Now, NQ actually is in the negative, but is it really doing much? Not really. Right? We talked about a 50% retracement level. If you guys caught this one earlier today, we were sitting right here, right? 8:45 is when Todd and I get on. We talked about, we just were at a 50% level. It came all the way down. The JOLTS data came out right here, went all the way back up again. It grabbed that 50, came all the way back down again. 10:30 reversal, came all the way back up again. Tagged this at 11:15, and is now pushed back down again. So the reality is NQ is at a -2 right now. Is it really trending? Is it really going anywhere but up and back, right? No, it's not, right? So it hasn't cleared yet. I will say though, one of the things I'm looking at, and I don't love the zone here, but there is a zone sitting right here. Again, we've hit it here, we've hit it here, we've hit it here. This is hit number 4. There is a parabolic move from what we saw from yesterday. So there is a short trade actually in the NQ. So, if there is a, I don't want to say a leak because that's not really what it is. I mean, it is, but it's not. If we really start to see NQ, and again, ES and YM really start to roll over and push to the downside in preparation for a move tomorrow, I do think that there is a short trade in here. Again, this will be the 4th hit through. It's a break of 12,960, right? Is where that's breaking through. It really can push all the way back down to this opposing level as far as profit goes. I mean, it does look like there's about a 1 to 5.5 in there. I only draw the 1 to 3s because again, that's what we're looking for minimum. But there's kind of the setup if we have a collapse coming through, right? And that's what it looks like. But again, from this 50% retracement level, there's been one trade. Well, actually, I mean, I guess there was the one earlier today, right? Here's the news one. Here's the retracement from the news. Here's the punch up again, and it's on its way to kind of continue to push back down again. So does NQ deserve to be higher? Probably. I mean, you're looking at the 3 biggies over here. Not the 3 biggest, but 3 high-tech names, right? Apple, Twitter, Tesla, all in the green, but yet this is just kind of stuck, right? But it's stuck in the same channel it started in. So we haven't really left, but again, great opportunity. I think this is a good short. I think it retraces back again. And again, tomorrow, if we're down here, could be a nice long opportunity, especially if they disappoint. Like I said, I'm really trying to find, just some. It's always fun. It's always fun to kind of think of like, okay, what could they possibly say so it'll only be a 0.25? Reality is, I really can't think of anything. I mean, I can't blame the labor market. They can't blame transitory inflation. I mean, I guess they could say supply chain issues in China is the one thing that they could, right? We don't want to raise it too much because supply chain issues, it'll cause more problems down the. That's about the only thing I got. If you got something, type it in chat, but I don't know what else they can do. So we'll see. We'll see where they take it the rest of today. YM also marked this level, and you can see we tagged it at 9:30. Here's the open, right? We talk about opening-based trades today. We were sitting, when we got on with Todd at 8:45, we were sitting here, and we mentioned that, hey, listen, we got a level. It's been pushed away before, right? It got pushed in the overnight. It is a 50% retracement. It did hit it here. And again, here's your opening trade. We'll put it on there. We'll slide this back so you guys can see it. And your 1 to 3 is sitting right there. You can see it went right past. So again, 1 to 3 was out. 10 o'clock came in. 10 o'clock just happened to be, and I'll make it big so you guys can see it. There's your 10 o'clock candle. What do we have at 10 o'clock? We had the JOLTS data. So it was enough to get the 1 to 3 out, and then the JOLTS came in and brought it right back up. And now it's doing that same kind of parabolic move back down again. But I would say, again, it does look a little bit more negative, but the reality is this a zone that we should keep selling off of? 1, 2, 3, 4. It went down, but again, we're 5 and it's busted through. I think the next time we really look for decent shorts, and this one is really up to 33,294. And again, if this continues to drive higher, I think that's fine. I think that's in preparation for tomorrow. That'd be a big move. But again, a 0.5 raise. I couldn't tell you when the last time we had a 0.5 raise was, but it is a genuine large move that is important. Okay. Russell. Russell also, again, this was a European-based move. 3 to 4 was all the way down, and now it's past. You can see that it touched the bottom, and again, we kind of came up to it again in this red candle. Actually, where is it? 9:30 was down here. It came up. 10 o'clock reversal down. Jolts drove it down and then came back up again. I'd say the same thing. Is this a zone you want to sell off of? I mean, at this point, it's been hit. This is the third time, actually the fourth time, right? 1, 2, and 3 here on this red candle. And this is the fourth time it has broken through. So if price stabilizes and finds the buyers right here, is there anything stopping this from going higher? Not really, right? There's a little bit of a selling up here, but from here up, that's quite a bit of a move in the Russell. And again, right now, Russell is the strongest, right? VIX is now at 5.29%. It was at 4.7 when we started. So the volatility is increasing, which tends to be a very, very positive one for all the indices. So again, kind of goes in line with the ES about going higher, right? Typically what we do is we're looking for, we'll use cryptos as a risk on, risk off type gauge. Right now, the VIX we know is down. The dollar, again, the dollar kind of rallied back up, but it's getting to an area where dollar selling should come in again. I would say right now, I mean, looking at the cryptos, you're seeing the cryptos are all down. Bitcoin down 0.8, Ethereum down 1.7, Dogecoin 1.1. Bonds also. Bonds are up a little bit, but I'd say they're down from where they're up from where they closed, but they're down from where they opened today. It's kind of more of a risk on type day. And again, are they trying to sneak in? Now, look, now all of them, actually the NQ. NQ is basically flat. NQ is trying to get in that green, right? So again, I'd say that it is kind of a more risk on, economy-based thing here. I mean, the dollar's holding firm. Dollar should pull back a little bit. Remember, for dollar strength tomorrow to come in, we kind of need the dollar to come back down again. Like we need the dollar to roll all the way back into here. So that way tomorrow we can really, I mean, it's either going to be a 0.75 and we take off. 0.5 should go up a little bit, wouldn't be much, but God forbid it comes in as a 0.25. It's going to look like this, right? It's going to go from this 102 at least it's going to look like something like that. It'll be quick. And the indices will be blowing it out of the water tomorrow. So we'll see. Let's go into currencies because again, a lot of reversals in currencies. So I mean, here's what we were calling yesterday. Again, there's the interest rate, right? Here's another opportunity off the same trade, right? Yeah, 12:30 right here. Here's your interest rate decision. So yesterday we talked about this one. We had to come up. It went up. It based. It confirmed. It came back in. Even if there was no interest rate, this is exactly how you should have played it, right? Price pulled back. It came up through. It formed a level. It pulled back for news, and then the news came out and it exploded higher, right? And then the retracement came back in again. The profit taking, but it hit the level again. And again, if I continue this across, you can see it worked the second time at 6:30 as well. So it's hit that area multiple times. Now we're hitting that level again. It's not really for me another buying opportunity. This is one of those ones I can see. The Aussie move is in. They raised it a little bit, but the dollar, they only raised it 0.25. The dollar coming at 0.5, even though it's factored in. It's all the dollar raising will also help reduce gold. And again, not that the price of gold, not that it's a direct correlation with the Aussie, but the Aussie tends to follow what the price of gold is doing. Price of gold is up right now, which is what you expect. If you want to sell gold, you want it to go higher first. Aussie's showing me kind of the same thing. This one should tick back down again. I mean, the two levels I'm looking for right now are 71.51 up top, right? That's the last time I had major selling and the spike almost hit that level. If I had my way, I would love for this, love for this to rally up in time for us to raise the interest rate and have it come crashing back down again. I don't know that it's going to be that much of a layup, but we'll see what happens from now until, again, really 24 hours from now where we're going to be. But watch this level 71.56. On the flip side, this is a profit target. And again, we got some confirmation bounces off of it. It's been a decent level, but it has been hit a few different times now. I am kind of leery about that. Now, I think there is a bit of a, kind of a Harry Potter short in here. Looking at this old level here, It has formed a base in there. It has pushed it pretty deep. A 1 to 3 is only to right there. It comes right in, and again, I'll move this one off because that's at this point it's out. Here's where profit taking would occur, right? We're almost there. I would say right now, so many people are looking at this, and again, it's kind of a double whammy. Dollar strength, crushing gold hurts the, again, crushing gold hurts the Aussie, also pushes us back to the downside. So there's a bunch of fundamental factors coming through for the Aussie dollar today. I'm sorry, the Aussie dollar. And that's kind of where we are. But also, Aussie dollar, very important. Interest rate rise tomorrow at 2 p.m. Again, we got 25 hours or whatever, 25 and a half hours to go. We got plenty of time. This is a big one for tomorrow as well. Off the yen. How about that? How about that for a whipsaw? Did the same thing, right? We talked about yesterday morning, 92.30 was going to be the trigger point. It did. It pulled back. And again, if you wanted to use the level we drew, it pulled back into the zone. It blew out the top. You were fine. If you were looking for more near-term, more near-term numbers, there's your area of basing. Here's at 9 or what, right at midnight. That would have been your trade. So whether you took the one we talked about yesterday morning or took the more close range kind of basing level that it pulled back to and the hold, again, 35 in one strategy, you know that one. There's your hold right there before news. Expected interest rate rise, it pulled down and then held. Telegraphed that it was going long. Right now, again, it is wedged back in again. I would not be looking to take another long. And really on this one, you had all this basing in here. Changes the L. And then now you're kind of up in a new level of basing up top. So kind of two different levels, right? Two different levels that we got to kind of look for. This is not necessarily a candidate for the interest rate rise tomorrow. It is a proxy, but it's kind of a double proxy, right? It's got a gold proxy and it has a Dow proxy. So Aussie dollar, much better option on this one. But again, had you been looking at interest rates last night, very, very easy trade. Actually didn't make it all the way up to the profit target. So we got to kind of have to investigate this one a little bit further when we get up there. But right now, this is not a candidate for me for tomorrow. Right now, it's really just consolidating. And you can see the lows are coming in here and you kind of have your highs coming in there. So it's consolidating in, but again, not the best opportunity for non-farm or any of the other data figures tomorrow. And I don't even think, let me see, non-Aussie. Yeah, I mean, there's not really a whole lot until Thursday for the Aussie. So not a whole lot of risk in this one. This one will probably be more drug around by gold, but again, it's going to be the proxy plan through the yen, which is the Dow. Now, Euro pound. So we've talked about the two levels in Euro pound, kind of the tops and bottom of this one. We're looking for shorts if it broke through 83.66. It didn't. It came all the way down to 83.72 and then turned and rolled. And then it came all the way up, and our short on the top side was the 84.18. Now, this has given Europe a little bit of a reprieve, right? We did come through and we said that, hey, listen, we don't really love this level. There are sellers there, and you can see it based in there. It was really the confirmed level of top that we were looking for. So, at this point, we've kind of pulled back. I'm going to remove it just so you guys can see it a little bit better. But that's where we're kind of coming up with our analysis. I would say right now, I mean, I'm more in kind of in line with, pound strength on this one. I like to see, I like where it is. I like the fact that we based in it again. Again, obviously we got some selling or some buyers coming in right here. It did go a little bit lower. Let's see, kind of from the bottom, where would there be people coming back into this one? Yeah, all the way down here. That'd be a nice move down. Let's see. That is and it's about 20, 25. Yeah, I mean, right now, looking at these two, look at all the news and look at the headlines. Let's see. Europe, let's go to EU. Yeah, Lagarde speaking, Spanish unemployment, and then let's see, is there any low ones? Just Eurogroup meetings. Do you have any headlines yet? Not yet. Not yet. But if you think about what's going on, I think the European Union right now has more risk. Talking about the economic sentiment and how bad things could be. Again, maybe cutting gas off. I love that they're like, you know what, we can survive without gas. We'll just, I think the swim team said that they wouldn't. Their pool doesn't need to be heated, right? That's the way that they're gonna save things. I think this one is more of a short than anything else. Again, it's pulling up. It's at a 61.8. A lot of people will step in. It was an area before it was, it just got to break through the buyers right here. So the next time this turn and rolls, I mean, a couple ways you could play it if you guys really want. You could play a break of it, right? Watch out for buyers right here, right? But I think this one turns and rolls, and again, I think we push back down. I still think the UK is a little bit more protected right now than Europe. I'm not talking war. I'm talking just, you know, how are they going to pay for the commodities? What is it going to do to their GDPs? You know, if they just need just one headline, and I think this starts to turn and roll. And again, dollar headline tomorrow are starting to talk about parity. It'll start sucking it down again. So I think there'll be some more weakness coming in. Euro yen. You can see euro yen is absolutely not as high. 137.41 was our kind of entry. It missed it by 3 pips. And again, that happens. Right now, again, I'm still waiting for this. This is just sideways. There's not really a whole lot of movement. We're not hearing a lot about the yen this week. 136.25 is the break. I'm looking for that to come kind of back down to 135.41. So we've explained this one on the morning show. Not too much to talk about this because, again, there's not really any trend. It's up 0.09. I don't think I have it up here. It's about similar to this one. So yeah, so really no driving factors. Now euro dollar is bouncing all over the place. Yesterday we played with that 105 number. 9 o'clock this morning when we were on with Todd, we said, hey, listen, I don't know what the heck is going on with the euro. There's some minor headlines, but this thing exploded 77 pips up, right? This exploded actually 79 pips up into a level at 105.66 that we had sellers confirmed that we were talking about. Said this is a big move, right? Parabolic move, no news. Look for a retracement. Well, it's now retraced all the way back down again. It's down 55 pips. The overall move in 24 hours is 3 pips. The reason I started off with that swing trade thing where it's like, oh, swing traders are like, nah, there's nothing out there. In 24 hours, they've made minus 5 pips, swing traders, right? Intraday traders have already made, what do we say? Just if you just did it just to the zone, 65 up plus 55 down. So 100 and what, 115-ish, right? 115-ish pips. Again, a little buffer on both sides in the same day. Again, day traders are winning this one. We're almost back to where we moved. So right now, again, let's put this on 30. Again, parabolic move going back to the start. I would say that 105 at this point is at risk of going lower. It's been hit and supported a couple different times right now. And again, 105 is a very big psychological number. But if we can start to break down and we can close in one of these two levels, really from anywhere from this 104.92-ish level down to 104.71, this is prime for the Europeans to take this lower. 400 pips is a lot. Let's see. Daily ATR right now is 100. An interest rate rise could go 2 or 3 times. That's 300 pips. That takes this right from where it is right now. 300 pips takes us from here. Actually, I got to shrink it. Here, perfect. Horizontal at parity. Again, this is we'll make it dead on. Text. We'll leave in the center. Yeah, we want that bold. Style, turn this one black. Turn this there. There you go. So again, right now, if it does nothing, if it holds right here, 300 pips to the downside, you're looking at, I gotta shrink it actually. Right there. We're at 101.81. We are almost down at parity if we do 3 times a daily ATR, which for an interest rate rise of 0.5 could absolutely happen. So it could be a massive movement tomorrow. Massive. Okay. And that brings us within striking distance within one, basically it brings us within just over 1 daily ATR of being at parity. I've been waiting for this for, I can't even tell you how many years, right? And again, the worst has not come for Europe. So I think this is a big one. But again, this morning, it was a pretty easy trade. We talked about this morning, parabolic move, no real news. All it did was retrace and bring it all the way back down again. Look for any type of level of basing and then, maybe it breaks this and then uses it as a baseline. But watching this one over the next really 12 hours is going to be a telltale sign of how we trade this one tomorrow morning. Okay. Pound yen. Pound yen is still kind of stuck. It bounced off the 62.10. We're looking for a break of 62.10. It grabbed the top side. I'm totally cool with it. I'm waiting for it to come down again. I would actually be okay if it bounces again, so it helps that euro pound trade. But if we are continuing to see pound weakness, for whatever reason, again, a break of 162, We have a race check. We have a solid candle over here. You can see that the profit taking will come in at 161.47. So there's a pretty decent trade setup here. You know, again, when and if this one ever gets down that low, right? Whoops, not that one. I didn't want to move that. I'm sorry. That's what I want to move. So yeah, the same setup. It's been there for a couple days. You guys have seen this one before. Okay. Pound dollar. So pound dollar, we talked about this one running down. It looks like it came all the way back up. I don't need this now. We talked about this level. Trying to bring some of these up. Whoops. All right. I don't need that one anymore. Actually, I do need that one still. Let's see. So it looks like we can pull this off. It looks like the 23's been hit, the 50's been hit, the 61.8's been hit. Yeah, so we don't care about anything else on this one. So let's clear all these profit targets out. It looks like we have some buyers right here. Again, that would be our initial first target. It looks like there's potentially some buyers right here as well. Yeah, this has given us a couple targets for today. I'd say right now, I mean, we're seeing pound weakness come in. Not so much dollar strength. Let's see, what's the dollar doing now? It's still, I mean, the dollar's still rising a little bit. It's in a selling area, so I'm not as concerned about that one. I would say in preparation for tomorrow, I think either of these are levels that we could bounce off of. Again, this is at least tested once. How much risk is that? It's about 8 pips, so it's tiny for this pair. It's about 10. This is similar. I'd like to see what this one does in the next 12 hours, really until the European session open, to see where it kind of drives us. Right now, again, we'll have the U.S. trader stepping online here in a little bit. We should have some more movement. This trade is out. Again, the short worked. I don't need that one. I just want to clear it. Let me actually bring this up to an hour, see if I can smooth this out a little bit. No, not really. I was hoping to get a little bit more. Let me look at something real quick. Let me see if we can pull. It's really this one down here. So, all right. So it looks like our downward side target on this one is going to be this 122.76. That is 115. So we're a single daily ATR away from that one. We're going to need some buying to step in. So what my thought process is thinking right now, either of these two levels could be potential buying opportunities. You know, again, we could have a bounce here or a bounce here, right? I think with the 0.5, I think what I mentioned earlier with the news is if we get a big drop down, right? If we get a big drop down, technically that is a fundamental change in the market. We're not necessarily looking for that to be a parabolic move, right? A parabolic retracement, but we have back to back, right? We have the back to back. None, dollar and pound. Take this off. What I mean by that is we are raising our interest rate and then they are raising their interest rate, right? So it's kind of like we go down and then this one serves to go back up again as it makes the adjustment. So I think this 23.72 level is probably a target for non-farm payroll. If we can drop down to that level and kind of base, or maybe it doesn't go quite as far, maybe it comes to here and then it starts to kind of dwindle sideways. I'm kind of looking for this 123.74. If it hasn't been completely just blown through like by 500 pips, this could be a nice little takeoff point for the pound reversal. Looking at something like this for the pound data, right? And not all the way up, it'll probably be like here, right? So it's there. It's kind of setting up. We are still a little bit early. Again, we got some more room to run on that one, so we'll see. Dollar CAD. So dollar CAD, again, we were looking for this pullback. It gave it to us. It was sloppy. It came back up and kind of pushed through the top. You may or may not have gotten stopped out depending on your broker. At this point, we know we have a level down here for the 50, and the 50 is right at 128.20, 128.12. This is hard because we have CAD strength right now too. So this is a dollar strength, CAD strength. We knew we had higher time frame levels that we were bouncing off of. These are 4-hour based levels. I just want to point this on here. 129.28 is a 4-hour based level. Okay. The reason why I bring that up is yes, raising interest rates 0.5% will bring strength to the dollar. More money will automatically flow to the dollar. But a 4-hour level does actually have the power to stop a 0.5 forecasted raise. If it was a little 30-minute level like this, it doesn't stand a chance with something as big as a 0.5 raise. But a 4-hour level, the higher the time frame level, the more power it has some potential. So I think this 129.28 is something we look out for. Right now, I think, again, we don't look for buying in this one until 128.23 it comes down. Dollar Swiss. As I said before, dollar Swiss, I'm not looking to do anything. Here's the interest rate change at 98.28. I actually don't think that this level can hold with a 0.5 raise. If it's a 0.25 in prices there, yes, it will drop. I think this one is a little bit riskier. I think the Swiss has some problems still. I've said it for 2 weeks now. I would maintain bullish in this position, even with all the news. And again, this gave us an easy opportunity. Let's see, is it 23? It was the 23. Look at that, 23 pullback into a level right there. Actually, it's here just a little bit below the 23, right? But again, easy pullback, went all the way back up to the 100 mark. I think, again, lack of an interest rate rise, 98.28 would be a time for me to reverse. And again, if we get up here at the European session open, there could be a short from the European session open, but I think this one is a pretty much a long, right? I think this is pretty much a long, again, a rather fast long from when news comes out. Swiss is not in a great place compared to the US. Dollar yen will be an interesting one to play today. You can see that we talked about these levels in here. 130.30 was hit. We pushed down. It came and touched it again. It broke through back through the 23.6. It is literally basing sideways. I would use the most caution trading this tomorrow. Why? Well, you have the dollar getting strong, but you also have yen coming in as a proxy for, for the Dow. So it's gonna. There's kind of two things in here. I do think the dollar yen probably goes up tomorrow. Is it going to explode? Is it going to go all the way up to 135? The magic number. Where is it? 135, the magic number for the the Japan central bank. Probably not. I feel like this will be a lot more insulated because it's the dollar versus a proxy. As great as this looks like it would be for the dollar, I think euro dollar, pound dollar, much better opportunities to get dollar strength into it. If anything, I'd be looking for a pullback and a break of 129.30. Let's go across the oil. So oil also kind of pulling back down. We mentioned earlier that, again, 102.20. We were looking for the break of it originally. It broke. It blew all the way through. It came up, grabbed the 61.8. So, again, the trade from before was good. Now that's pulling back down. Again, it's kind of a secondary touch on it. There could be something small in there. And, again, this is more for oil inventory tomorrow. We get the API report at the end of today. It's right now just kind of chopping. It's not the big boy in the house right now. The big boy is the interest rate change. So just take that with a grain of salt if you are a commodities trader. But don't forget, API report kind of gives us a foreshadow of what's going to happen tomorrow. Tomorrow's data, it's not going to be as big of a mover. Oil inventory, unfortunately, is not a biggest player as what an interest rate rise is. And then Thursday, OPEC Plus is talking. They're meeting. We'll definitely get some headlines on that. When they've already said, listen, we're keeping politics out of this. Like, we're not getting involved in politics. We're looking at sheer numbers. Again, Russia's part of that board as well. I think there's some explosions there. Natural gas, as we mentioned earlier, it's up 7%. It's up 7%. We talked about two targets yesterday. You can see it based, it pulled back, went right through that top level. And again, we hit this multiple times. Once it based, it's like this one is smoke. Look for this one to go long. We did break 8. We actually got up to 817 just a little while ago at 10:30, and then we pulled back a bit. What's scary about this one is it pulled back to grab some buyers here. If it really starts to take off again, do we hit 9? Like, could this hit 9? And this is one of those things that goes back. If you look to see where we were just a year ago, February. I don't even know if I'll be able to do it here. Let's see. Let's go back to a 4-hour. Where were we just a year ago, right? 2021, May right here. We were $2.80, and now we're at $8. So over 3 times. Okay, 3 times. Yeah. Look, this just shows you how far this has gotten out of control. Right here. Okay. So Yeah, unfortunately, the interest rates, raising the interest rates is not going to give us a reprieve in this one. So it's just unfortunately natural gas is not there. Be cautious. I think this one, any pullback is another buying opportunity. I think this has the ability to go higher. I do not want to see it hit 9, but it could be well on its way. Gold. Gold is pulling back. 1878 was what place we were looking to pull a trigger. Again, this was a level we had forecast from lower. If you use kind of the true bottom, it got really, really close. I drew this to get the, not to get the 50 there, but this is a level that I have buyers coming in at. You can see it this morning at 10:30, we literally pulled the reversals. It comes back down again. I think anytime it pulls back, I think this is a buying opportunity. I think tomorrow is a short gold opportunity. This orange box is the start of the week. I said last Friday, this is a week that you want to be short gold. You can see that it had immediate kind of $30 from the open. Yeah, $50, sorry. $50 down already on the week. Again, pulled back for some profit taking, but I think I think this one has. I think we go red tomorrow in gold. Whether it's 0.5, whether it's 0.75, it's 0.75. I think this goes much farther. If it's 0.25, I think it's probably a buying opportunity for gold, but I really don't think they're doing 0.25. So again, got really, really close, but if we can get back up, if we can get up the rest of today, back up to 1878, I think this is a short for tomorrow. Silver, kind of the same stance, but silver, you can see it's just chopping back. 2274, 50% retracement level. Lots of basing. We were looking for this, and again, it's hit it, hit it, hit it, hit it, hit it. I think 22 is on the radar for tomorrow, right? It's only 64 cents. It should drop through there. But I think we hit 22. That's my call for this week. But yeah, 7.5% natural gas is up today. And again, not looking like it's going to get any better. So, all right. Well, that is it for today. Again, we kind of sped through there at the end. You know, there's a lot going to happen in the next 24 hours. This 0.5 forecasted interest rate is an absolutely monstrous decision, but look for look for the API oil report tonight. There should be European session movement on it. There'll be the ADP for non-farm, which is not the big one. It's the ADP payroll non-farm version. Has been quite a mover. 10:30, we have oil inventory. It'll go flat. Then all of a sudden we have the interest rate rises. Going to be a good day or a really, really bad day tomorrow. So we'll see how much is factored in. But catch us tomorrow morning. We'll see where the overnight movement was. YouTube, search Nadex, like and subscribe to the channel. Hit the bell notification icon so you know when we go live. We'll be on at 8:45 tomorrow doing some analysis pre-non-farm, pre-interest rate rise tomorrow. All right. So any questions that you have? Whoops, too far. Shoot in the support at keeptradingsimple.com if it's a Nadex specific platform question. Again, positive, negative comments for Netix about anything that they have. Again, send that to them. But anything that I mentioned today that you have questions on, shoot that to me, support at keeptradingsimple.com. With that, I'll catch you tomorrow morning. Good luck tomorrow. Everybody, please be safe. Please use stops for those of you that are not in limited risk products. And with that said, I'll catch you guys next week. Thanks again. Take care.